Ladies and gentlemen, I hope you got your rest over this weekend because we are heading into a crazy week for markets and for Tesla stock. Here in this video, I will explain the setup for Tesla, the option activity, the positioning for this week, the short interest, all of your news that you need to know, and the technical setup. And yes, we do have a lot of economic data coming out really this entire week, and this is going to be important for Tesla as well. So first and foremost, as I have explained before, Tesla is currently in a gamma squeeze, okay? Tesla's kind of just in this melt up mode. You're not really gapping up at all. You haven't seen a gap on Tesla since November 11th. It's kind of been slow-ish and steady to the upside. Now we're starting to make some really good progress now at almost $436 per share, but you have not seen that short squeeze yet. I do anticipate that will happen here in the last couple of weeks of December. And from a more technical perspective, just take a look at Tesla's RSI. Tesla's RSI is at 78.60. I mean, that's not that high relative to what Tesla has done historically during rallies. I mean, look at this rally that peaked out in July. Tesla's RSI was 89. At one point, Tesla was the most overbought, highest RSI stock in the entire market. Look at this period back in June of 2023. Tesla's RSI was in the low 90s. Okay, those are the kind of rallies that we see for Tesla. Look at this one. Back when Tesla hit all-time highs previously in 2021. Tesla's RSI was 95. Okay, so today only being at 78, I mean, it still looks like we could have another 10 points to go on the RSI. That could easily send Tesla stock into the 500s. And that would be kind of normal for Tesla in terms of, you know, where rallies progress to. And the fact that I think we're going to have a short squeeze because it makes sense to have a short squeeze, as I've explained many of times here on this channel recently, if you're a hedge fund or institution, you know Tesla's going to have a good year next year. Like, that is pretty consensus at this point. Okay, so if you're short on Tesla and you have this big short position you're down on, you probably don't want to carry that into 2025. Especially since you've probably done well in other areas of your portfolio, okay? If you're short on Tesla, you're probably long on NVIDIA. You're probably long on other big tech names. You're probably long on, you know, small caps or whatever else have you, okay? That's done well. So you could cover on your Tesla short position, tax loss harvest that loss against some of your gains in other areas, and you're not being short into Tesla, or you're not carrying your short position within Tesla into 2025, which I think is, you know, a pretty good idea. Because even though Tesla has went up a lot recently, you are still barely above your prior all-time highs. Just considering that was set back in 2021, like, how impressive is this rally really? You're 5%, 5.5% above your previous all-time highs. That's not that much, okay? Look at Apple for an example, just to kind of, you know, compare apples to apples, no pun intended. In 2021, Apple, you know, its previous all-time high was 180. Today, it's almost 250, okay? Apple is 40% higher than its 2021 all-time high. If Tesla were to go 40% higher than its 2021 all-time high, I mean, we're going to be looking at some crazy numbers here. Okay? Tesla would be a $579 stock to just match kind of apples to apples with what Apple and Tim Cook have done. Okay? And I would argue that Tesla's in a much better position than Apple. I think Apple's actually a pretty good short right now heading into 2025. I mean, Apple really hasn't grown revenue at all. It's a very expensive company. Like, Apple is more expensive than Tesla if you factor in growth. Okay, if you look at a PEG ratio, Apple is more expensive than Tesla. That's crazy. Because again, Apple has grown revenue 5% in 3 years, and Tesla is projected to grow revenue 20-30% next year. Google's CEO just said this about Tesla. He says, quote, "I think obviously Tesla is the leader in the space. It looks to me like Tesla and Waymo are the top two," in reference to self-driving technology. I mean, it seems like Wall Street is only just now starting to figure out that Tesla will be successful in some capacity with robotaxi. I don't think all of that good news is baked into Tesla stock. Example, I think Tesla could launch in 5 to 10 states next year for robotaxis. Okay, yes, they're going to be monitored by a central location, okay, a office, if you will, of people watching these robotaxi rides on screens. Imagine somebody sitting at a desk watching 10, 15, 20 different robotaxi rides at a time, ready to intervene if they need to, okay? That's the kind of approval that we will be getting next year. And instead of 2 states, just California and Texas, as Elon Musk said previously, it's going to be more like 5 to 10, okay? And that's not priced into Tesla at this point. And it does look like today some Tesla owners are using actually Smart Summon in China. So you're actually seeing some FSD or AI capacity from Tesla being used over in China. So that's pretty cool. Now, Tesla is expecting a launch of FSD in Europe and China in the first half of 2025. So this is a good step in actually getting there. Tesla is also holding a grand opening today for its new store in the heart of Washington, D.C. The store features Tesla's brand new, more futuristic retail store design. Now, Gene Munster said this about Tesla's FSD progress. Quote, "The whole conversation around Tesla, very few people are actually experiencing how far along they are. Layer on top of that the fact that humans are becoming worse drivers, with 40,000 or more people that lose their lives per year in auto accidents in the US alone. And layer on top of that with GM's Cruise announcing this week that they are backing off from autonomy, it just leaves this wide open opportunity for Tesla that's not fully appreciated in shares of Tesla today." And I'll be damned, Elon Musk had dinner tonight with Apple's CEO Tim Cook and Trump at Mar-a-Lago. Okay, so now let's dive into a little bit deeper conversation around Tesla stock for this upcoming week, what the positioning looks like, and my expectations. So if we take a look at Friday, option activity for Tesla from hedge funds and institutions. Keep in mind, this is not retail investor activity. This is hedge funds and institutions. These orders are like 100,000 to multi-millions of dollars per trade. Sure, if you're balling like that, if you're a retail investor, you will come up on this the scanner here. But 99% of these options are from hedge funds and institutions, okay? You had 516 different trades on Friday, totaling $373 million with a positive order value of 77%. That's a pretty good number. I mean, that's good for any stock, right? In terms of Tesla, that's a little bit lower than what we had seen recently, okay? Like Thursday's positive order value was 87%. Over the past week for Tesla, you have seen 3,301 different trades totaling $3.1 billion with a positive order value of 82%. Now, let's take a look at this Friday's expiration. That is December 20th. And what we've kind of noticed is it takes a little while for the gamma squeeze to pick up once we start a new week. Like last Monday wasn't very exciting. But then you start to get into Tuesday and Wednesday and Thursday and into the end of the week, including Friday, and you see that progression of the gamma squeeze. So it wouldn't surprise me if tomorrow is a bit of a slow day, is a bit of a perhaps even red day for Tesla. But then the gamma squeeze to really get ramped up into that expiration. Okay, so if we take a look at the options chain right now, Just looking at specifically your important strikes here, the 440 strike on the call side had 32,000 for volume on Friday, has 35,000 for open interest currently. Okay, so I think that's going to be a more important strike as we get into this week. I think there's going to be a lot of activity around that. But keep in mind, these are $1,300 options a piece. Like, these are not your cheap options for Tesla for a single week of time. If you look at the 450 call, you have 56,000 for volume on Friday. Again, these options are $930 a piece, which is impressive. And you have open interest of 18,630. And we do see, it looks like the $500 call is pretty important as well, with 36,500 for open interest and 41,500 or 36,500 for volume and 41,500 for open interest. 490 call had 14,000 for volume. 480 call had 9,000 for volume. 470 call had 12,000. 460 call had 15,000. So it looks like if we can break above that 440 level, 450 is definitely in the cards for this week. Now, 460 could be in the cards if we start to see option activity pick up, if that gamma squeeze does start to pick up. Now, I will say, though, if there is a week from now until the end of this year for markets to be a little bit slower, at least in the first half of the week, it is this week, okay? Because of all of the data that we are going to get and because of all of the important catalysts that we're going to get, okay? Specifically, the Fed on Wednesday. The Fed will be giving us a new summary of economic projections. And let's face it, recently, our inflation reports have come in hotter than expected. I don't think we're going to get a big dramatic change from the Fed. I don't think they're going to be super bearish. I don't think they're going to be super bullish either. I think they're going to kind of skate through this FOMC meeting. And right now, Wall Street is projecting about 3 cuts next year. I think that's pretty much correct. Okay. Now, if we get 3 cuts projected on the summary of economic projections, that's great. That's fine. Markets are, that's our expectation already. Okay. Could you see some volatility? Could you see markets go up or down? What have you? Yes. But after that, the next day, like Thursday, I think that opens the door for markets to rally into year end. It's actually pretty fascinating that during this rally we've seen for Tesla, the markets themselves have actually grown pretty bearish. Okay. Now the S&P has done decent. Okay. It has started to break down a little bit, or at least kind of trade sideways. The RSP looks really bad. It's at a very critical level. If you break down further from here, you're going to be in a pretty rough place. But even some of your advanced decline lines for 10 days now, you've seen more stocks falling than rising. You're getting pretty bearish, relatively speaking. AI investor sentiment has fallen again to 43.3%, which is, not that impressive from a market standpoint, and actually almost being at all-time highs. You would expect that to be a lot higher. CNN's Fear and Greed Index is neutral at 50. That is not super euphoric. That is not super bullish. Tom over here on X shares this. It says the weak breadth numbers the past few days have pulled down the New York Stock Exchange McClellan oscillator to a fairly oversold level. It is not the lowest ever, and it can go lower, but it is pretty fun to see an oversold condition in an uptrend, and also in a period of seasonal strength. So this oscillator is at some of the lowest points it's been at, over the past year. You're at the same levels pretty much today as we were at, during 10% corrections. So, under the surface, there has been quite a bit of pain. It is possible, in my opinion, if we get Jerome Powell on Wednesday and they're not talking about raising rates or anything super dramatic, then markets are going to take that as buy the news, right? You could see a sell the rumor, buy the news situation. Just because after you get Powell out the way, that's kind of your biggest catalyst between now and year end, and it's gone, right? Like, what else is there to be fearful about at that point? I don't think markets want to change their narrative on the economy for next year, on earnings for next year. I don't think markets want to get bearish for next year. So once you knock out these risk catalysts, then it's likely just room for markets to move higher at that point. And as Seth Golden writes on X, the coming 3-week period is historically the absolute best performing weeks of any market cycle period historically. Election fund flow year-end chase, Santa Claus rally period, and first 5 days of January. So again, I really do think if we can just get the big catalyst out the way this week, then we're going to have that room to move to the upside. Now, Tesla's short interest of free float sits at 2.77%. You have $32.34 billion sold short in Tesla, totaling 77.34 million shares that are currently still sold short. On Friday, you had 493,000 shares on net that were actually sold short. So you have not seen short sellers actually cover at all on short positions. And I think, after the big catalyst that we're going to have for this week, once they're out the way, you could actually see some shorts start to then cover on those short positions. Now, on Monday, as far as economic data, we'll talk about this a little bit more in the next video, but you have S&P Global Composite PMI, S&P Global Manufacturing PMI, and S&P Global Services PMIs. On Tuesday, you have retail sales. That's going to be very important because is the consumer doing well? Well, retail sales are going to tell us quite a bit there. Wednesday, you have building permits and the Fed. Okay, the Fed's the big catalyst. Once that is out the way, I think you will get a buy the news situation because I think some people are fearful about what the Fed could say or could do. And I think that's why you've seen such a negative streak in some areas of our markets. This is the longest losing streak ever, 10 days now, for the S&P value sector. So if your portfolio has not been doing that well in the last 2 weeks, it's because it hasn't, okay? It's because under the surface, markets have not been doing as well. Now, obviously, if you're in Tesla, you've done just fine. But if you're not in Tesla, you're in other stocks, they have not done good at all, okay? Thursday, you have initial jobless claims. That's going to be important. We've recently seen this number start to spike. If it continues to spike, that's going to be pretty problematic. You have Kansas Fed data, Philly Fed data. That can be important, but I think at that point, we're going to be reacting to still the summary of economic projections and the Fed. Now, on Friday, you have core PCE expecting this month over month is 0.3%, personal income month over month expected is 0.4%, and personal spending month over month expected at 0.5%. I think Friday's data will be important, but I mean, honestly, you're probably already going to be going higher in our markets. Now, if this week is a bad week, then I do think that sets us up for the following week to be a little bit better. Could I imagine that we're gonna have a good maybe post Fed reaction and then kind of get nervous again heading into PCE and personal spending and personal income on Friday? Sure. And I think overall this week's gonna be very volatile. And again, Monday's gonna start off slow, I think, for Tesla and for the markets, generally speaking. But I do think this is gonna be another decent week for Tesla. If this week's a little bit more of the wild card because I could see a scenario where Tesla just does okay or does good, but it becomes a little bit easier to see a larger rally coming the following week. Okay, from December 23rd over that 2 week period into year end, the 23rd through the 31st, that's where you could really see Tesla shine. But I'm definitely not going to count out this week being another strong week for Tesla. I think there's going to be a lot of volatility. The fact that Tesla did close at the highs on Friday is also a very good sign that gamma squeeze just progressed throughout the day. And if that happens, again, this week, like it happened last week, expect Monday is going to be a slow day, and then you could really start to chug higher at that point. And just based on, this current trend that we have, you could see Tesla being a $480-ish stock by the end of this week. That's assuming we don't see any gap ups. We don't see short sellers start to cover on short positions, any of that. Now, I will also point out the volume for Tesla has been relatively average, even though Tesla stock continues to go higher. So if we do get a volume spike, in which I think we will before all things are said and done, that's really what's going to help drive Tesla stock higher from this point. I mean, on Friday, you only had 89 million shares actually trade hands. Just imagine when we start getting 200 million shares that trade hands on bullish days. You're going to have 10, 15% gains on some of those days. And that's when the rally short term will most likely be slowing down. So at this point, I don't see any signs of that. Let me know what you guys think about all of this down below in the comment section. That is going to do it for this video. If you guys want to come trade with us, check out that link down below in the description of this video. Have a fantastic Sunday. Go Lions, and I will see you in the next one.